discussed at the start. PN Vijay joins in as promised. Vijay, morning has gone a bit sideways for the market. Do you reckon the worst of the correction is behind it, or it's just biding time before another big move?
Well, it's surely biding time before a big move, whether it's down or up. You can toss a coin. I think what's been happening last 3 weeks is that the market's been very, very edgy due to the fact that I think there is this feeling that bank problems and sovereign problems which are out of the way may be coming back because of the PIGS crisis and specifically Greece. So suddenly the risk appetite seems to have ebbed away among global investors who are really worried about the financial system. I think the ECB is doing a good thing. I think regulators have learned to be very quick off the feet in the last 2 years, playing more on sentiment than on fact because they've realized markets move more on sentiment. So the action has been fast. So there is some calmness in the markets. So next 1 or 2 weeks, it's difficult to say. Also in India, we have the budget coming. But looking at 3 to 6 months, I think the view is a lot clearer and a lot more positive.
Vijay, morning to you. What about the entire flow situation and your assessment on that? Because we've seen that the FI selling pressure has intensified at least in the last 1 week or so. Do you think that pressure will continue? Vijay, is my voice reaching you?
Okay, it's for me. I don't really think so. The FI flows, have not been that much, the way it's made out. In fact, whole of January, the FI sold only 1,200 crores worth of stocks and the market fell 6.2%. Considering we trade about 100,000 crores, this is very, very minuscule. I think the retail sentiment is very negative because even if you had the FI outflows, we had the domestic inflows. So the institutional flows in this market, even right from 2010, have been positive, strangely enough. The retail sentiment is pretty bad right now, and we need a few days of nice, calm trading for the retail investors to come back. I think I have a hunch that the global fears are getting ebbed away, and probably fundamentals will take over. I mean, it's a sort of a long call to make, but I think if Greece blows away and pigs are not such a big thing after all, and calmness would return, and then probably the retailers would feel more relaxed about the market.
Domestically, though, interest rate sensitives are bearing a very big brunt, Vijay, on the back of any possible impending policy change. What's your view on some of these sectors that have really collapsed, possibly banks?
Yes, banks are fighting with an inflation interest rate hike expectation. We had this big fear before the policy. The policy came with 75 basis points increase in CRR. They left the rates unchanged. That was sensible because strangely enough, even in this inflation, the credit offtake has been okay, and the M3, the money supply, is reasonable. It's around the median 17% level. So there is no monetary reason for RBI to tighten on the ground. But if inflation, headline inflation, keeps bogging like such numbers, and so the fear is that sometime they would tighten. My own feeling is RBI is done with the tightening for some time because today the rulers in RBI and in government are more leaning towards erring on the side of growth. It's a very big sea change in the RBI administration also. They tend to follow the MOF line more closely with a ex-bureaucrat heading it. So I don't think RBI will see a Friday 6 p.m. decision to hike interest rates. I think such things would happen. But still the banks are feeling that very much. And I think banks are getting to be underperformers and would remain so for some more time.
Tactically, Vijay, how do you approach this pre-budget run then for the market? I mean, usually it's an extremely eventful time, but this time we're going in a little more quiet. What's a good top buy to keep right now?
Well, I think the sectors to get into are where the fears are maximum. For example, there's a whole lot of fear about construction, For example, people are afraid that the projects are not flowing through fast enough, etc. But on the ground, I think things are pretty good for them. And also, sectors like pharma, which are really coming into their own, not the large ones, but the mid-cap ones, they're really having tremendous business models, sometimes to be compared to the Infosys and the Wipros of the world about 15 years ago. They are really climbing up. These sectors, which may not be very much affected by the budget, because the single big fear I have is the tax collections are so good, the PSU disinvestment is so good. Somebody in the government, even Dr. Manmohan Singh may say, hey, remove all those excise duty concessions and customs duty concessions we have done. So then we'll have cement, auto, and the whole lot of them getting a beating. So on the run-up to the budget, I think stay clear of those budget-related risks and be prepared for a nice run, you know. I think one thing I've seen, Mithali, in last several years, if in the next 12 months the consensus is the economy is going to grow at a bigger rate than it was doing before, there is a bull market. If the next 12 months your GDP is going to be growing higher, then there is a bull market. There is no exception to this. So if next 12 months, if people feel we are going from 7.2 to 8.9 and 9, whatever, at some stage the positivism will return to the markets.
The indications are, and we don't know yet, that there may be some kind of piecemeal approach with, petrol prices, diesel prices, LPG and Kero. What do you do with that space now?
Yeah, that's a fairly safe guess to make, because Kirit Parekh, in his own style, thought of sweeping changes. It's more like a roadmap than a policy. I guess this government would hike petrol and diesel prices off the budget. That is in the 10-15 days before the budget, because that's been the practice of various governments, though it's a bit of cheating if you ask me. I think the government, peculiarly enough, is to be pitied a bit, because if you see from the middle of November till yesterday, primary article food prices have actually come down quite a bit, but they're reeling under the base effect, which is showing at 12%, just like they were enjoying the base effect in the third and fourth quarters with negative inflation. So the base effect will change somewhere around the 10th or 15th of March, and suddenly we find that inflation is no longer on the headlines or on CNBC. But unfortunately, they can't wait till that. So I think they'll just bide their time, and some good news is there in the political front. They'll bring in a petrol and diesel hike. And after that, I don't think much will happen. I think till Bihar elections are over, I think they won't dare touch kerosene or LPG.
You track Sun TV, Vijay. It saw a distinct amount of pressure yesterday. Any change or development that's getting the market nervous?
Sun TV, well, there is some talk of Sun TV entering civil aviation, I think. The DTH has been very successful for Sun TV because of they went in for very base pricing, and they have gobbled up, I think, about 18% market share. And of course, they have their stranglehold in the southern market, which is the highest viewership, and TV remains there. So, but I think the latest news that they may be getting into civil aviation has spooked the market, because it's such a intensive, capital-intensive industry, and doesn't rhyme with media, which is low-intensive service sector companies.
Vijay.